Hello.
Great. Well, thank you very much, Hugh, for coming here to speak to the Oxford Guild Business Society.
It's a huge pleasure. Yeah.
We just had a quick few questions for our viewers. Let's start off with your greatest challenge. So obviously you've had a very varied and successful career, and I'm sure it's quite a hard question to answer, but if you could pick one challenge you face, what would be the greatest?
Do you mean in terms of the markets or in terms?
Just in terms of your career.
Okay, the single biggest challenge is managing people's expectations.
Okay.
That's tough. But if you can do it well, then it makes life easy for you. But it's there are a lot of very ambitious and capable people in here in this industry, and they want it all now.
Yeah.
So you've got to sort of moderate their expectations in a way that makes sense for them and hopefully makes sense for the firm that they're in.
Sure. And again, another kind of big question, but if you could say there's one particular piece of advice that's always stuck in mind, what would you say is the best piece of advice you've been given?
Well, somebody, my mentor, who's a chap called Richard Thornton, when I went to live in Asia, he said, "Look, Hugh, whatever you do, don't pay any greater attention to an analyst just because he speaks the language."
Okay. Great. And well, obviously you lived through the financial crisis and survived to tell the tale.
Up to a point, yeah.
What would you say are the main kind of lessons to be learned for the hedge fund industry in particular from the crisis?
That's a very good question, a very, very difficult one, really. The major lessons to be learned is that it was clear that there was a lot of leverage in the system, but it was unclear just to what a large degree it was.
Yeah.
That was the first lesson, and that meant that there were many, many more forced sellers than one could reasonably have expected. Secondly, the authorities are quicker than you could possibly imagine to abandon established monetary standards. You know, who would have thought that 5 years after the crisis, base rates would still be 0.5%. The monetary base would be, half of GNP, and we're still buying bonds in America, even on.
Yeah.
So the response from the authorities, which I think has been it's been efficacious so far, but they've been prepared to take even greater risks than many people would have given credit for.
Okay, great. And I mean, if you could do it all again, start your career at the beginning, what are the main things you'd do differently, if any?
Well, the two things that I did that I thought were I thought at the time were sensible was first to go and live in Asia, and second, when I set up a business myself to set up with a partner, I would most probably have. I think I would have paid more attention to the marketing function in our business than we have done. I think that's been important, and I would have got hold of a partner who knew about the American stock market, because I mean that's not an area that we focus on very much.
Yeah. Okay, great. And moving forward, what are the plans for the future? What are you hoping to do over the next few years? Carry on.
Yes, carry on regardless.
Regardless.
I'm no longer the chief executive of my business, so I can run some portfolios, and that's a great deal of I get a great deal of satisfaction out of that. And there's a lot of optionality in these businesses. So I'm 58. I've got no reason to retire early or soon, or I intend to keep going.
Great. Well, thank you very much for your time, Hugh.
It's a pleasure.
I'm Abbas Kazmi, and this was an interview with Hugh Sloane. Thank you.